Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's go over what has happened today and what we can expect moving forward. Yeah, so as usual, if you enjoyed the video, don't forget to hit that like button. I'm getting spammed with random notifications here, but with all that being said and done, if you enjoyed the video, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for just $2.99. You can access all my intraday thoughts, posts, updates, technical analysis, options flow on Tesla every single day. The market is open for just, again, $2.99 a month. The link is in the description of the video. So if you're interested, we'd love to have you there. But if not, let's just get right into it. Tesla closing the day pretty much at $173 per share. Elon is just spamming posts today, which is going to be a nice increase of almost 5% on the day, which compared to the market, obviously is a very, very nice outperformance, right? Off of the back foot of that gap up post market we had on Friday, off of Elon announcing the 8.8 robo-taxi unveil. And obviously we had a bit of a follow through today, which was nice to see, right? Kind of sold off a little bit pre-market, but then the follow through did come in. And so far we're holding in a pretty interesting spot. Now, again, I want to make things very clear. As usual, we'll go over the bullish and the bearish aspects, right? I'll try to be as unbiased as I can, even though I'm long-term bullish on Tesla, but short-term, I try to be as unbiased as I can. And I'll give you my honest thoughts. So let's get into it. Tesla is closing at a pretty interesting spot here. So the interesting thing about this is going to be pretty simple. So first and foremost, we have, of course, let me go ahead and I want to switch this over to the 20-day moving average, actually, just so it's such a good moving average. But, you know, we have the 20-day moving average right here, which we did finally close above, which is nice to see, this red line right here, right, which is obviously a pretty big plus. However, the negative is the fact that we got rejected almost pretty much to the T at the 21 EMA right above us, pretty much at the high of the day today, which was at about $174.50 per share, right? So not only did we get rejected by that 21 EMA at the high of the day, pretty much to the cent almost, but we're also in a pretty, important resistance area right around here that I've been talking about for quite some time. This 173 to 175-ish, of course, resistance area that, has proved support before and has proved resistance before as well, like it did 2 days ago, like it's obviously doing today with the 21 EMA as well. That's not helping. So, that is going to be a very important level to break for the bulls, right? And the bears to defend. We also closed pretty much right at this volume increase right here on the volume profile. So, but it's kind of like right dead smack in the center. So it'll be interesting to see how tomorrow plays out. Now, obviously a very important caveat is the fact that this week we have CPI on Wednesday, PPI on Thursday. And you all know how the market likes to be a little bit spooked, I guess you can say, moving into such information. So I wouldn't be surprised if tomorrow is a bit of a red day, but we'll see, of course, how it plays out. Overall, Tesla, in my opinion, honestly, it's not looking bad. Now, for the upside levels that I want to see that are important to break for the bulls and that I think are really crucial to even turn the tide for the bulls, right? Like I said many times before, but I'll reiterate, 173 to 175 is probably step number one, like the major first step number one, right? So, finally close back above it, close back to 21 EMA. And, start turning these areas back into support. That's step number one. Step number two, and probably the more important step, the more vital step, is going to, without question, going to be closing candles pretty much above about 183.5, right? As you can see back here, it acted as a massive support. And now it's acting as a massive resistance. We got rejected right here on March 24th, roughly. Or sorry, not March 24th, March 7th, roughly, right? We got rejected over here not too long ago, right towards the end of March. 2 candles right around that general area with a pretty nasty candle right here, which, massive sell through right here, right? Of course, we saw that. And then, we are approaching it once again. So that's going to be a very crucial area, like probably the most important level for the bulls to break and the bears to defend, 183.5 roughly, right? Because that can start potentially, really turning the tide for the bulls and really starting to change momentum, because we arguably would be setting a fresh higher high, right? If we go over here, bring out this drawing tool, for instance, let me zoom out a little bit further, right? For instance, from back here, right, we had a massive fall like this, then we set a high here, then we fell down, then we set a high here, then we fell down, did not set a lower high, a lower low, which is good, a potential double bottom. And now if we break above 183, this arguably starts changing the trend. And then we'll potentially come back up here to 200 roughly, most likely get rejected, come back down here, set on a fresh higher low. And then now you can see this from this pretty much equal low that we just said, maybe you could kind of make the argument to higher low, but it was actually unironic to the literal decimal, to the literal cent of the same low back here. So, the point is it's not a lower low, which is good. That's step number one. But, if we start breaking these trends and we start breaking this previous higher high or lower high, and we start setting a fresh higher high right here, and then a more convincing higher low, this would really start breaking the trend. This would really put, pretty massive cracks into the bearish thesis, and the bullish thesis really starts to reignite on that. So that's going to be the most important level to break. Other than that, this can still potentially be a dead cat bounce, a bull trap, whatever you want to call it. This is still potentially in that realm of possibility. And there is still a very real possibility that we do go lower, that we do still come into the 150s, and then we still do come down into the 140s. That is still a very, very real possibility until, at least in my opinion, 183.5 has been broken, closed, and held by the bulls to where that thesis that I just mentioned, the 150s, the 140s, still possible. Again, you never want to take anything for granted in the market. Anything is possible. It just becomes less likely. And I would say, even argue, substantially less likely. So that's kind of what I'll be looking for. But again, with CPI on Wednesday, that can be the make it or break it moment for, the market and Tesla, to see if we finally get a correction, because the market is starting to approach some pretty crucial levels that, it's kind of like on a thin thread, we'll say. And the market starts to correct, that we'll begin putting pressure on Tesla, which, can bring Tesla back down a little bit lower once again. So keep that in mind. Now, taking a look at the daily once again, though, the MACD is still flip bullish, which is a good sign. We have the RSI still below 50, which is, showing a little bit of weakness, right? We definitely want to start seeing it above 50 to really potentially get some momentum building up. The stochastic is potentially looking to flip bullish as well here, which isn't too shabby, right? If we bring out, actually, before we do this one, let's do this one here, right? You can see the 13 is still above the 5-day, 5 EMA rather. So, the momentum still technically is bearish until this not only crosses, but more convincingly and starts holding, kind of like what we had over here. Remember how I said how it crossed, but it wasn't convincing. It was just ever so slightly above it. Well, that's kind of what I mean. You want to see a more convincing cross than this, which we haven't got yet. So, and I think this would cross if we do break above 175 at least, especially if we break above 183. This will be probably a meaningful and convincing cross, which again should also be quite bullish. Now, moving over to one of my favorite indicators, the band regression, right? Again, just essentially showing oversold, overbought, or mean, like, average levels, if you will, if that makes sense, right? And we're right now sitting right in the middle, right? We're sitting right in the middle. We're not overbought on the daily, at least in my opinion. We're not oversold. We're right in the middle. We're kind of in like a limbo land, right? And the way I look at it on the daily and the 4-hour chart, very similar concept that we're sitting in, right? Kind of right in the middle, is if we ever come down into the lines down below, like I said before, you start entering oversold territories for each incremental line, the more oversold you are, and vice versa. If we start entering the overbought territories, these lines up here, especially the red one, then you're more and more overbought for each line that it's surpassing to the upside. At the moment, like I said, we're pretty much right dead smack in the middle. So we're not overbought, we're not oversold, we're kind of in limbo land, almost as if we're waiting for CPI on Wednesday to see where we're going to go next. But with this all being said and done, personally, I would not be surprised if we do get a small correction. And I'll talk about what kind of correction I'm expecting. Again, a very tiny one, but nonetheless, this is assuming the bullish thesis remains intact, right? Assuming the CPI comes in, at least, in a good, reasonable spot on Wednesday, and the markets continue to rally. Again, that's the assumption. But if that were to be the assumption, or if Tesla just decides to disconnect from the market entirely for, whatever reason that it likes to do, right? I would expect from this low right here that we just recently had to this obvious resistance that we're finding, a retrace back down to about 169 to 167 as early as tomorrow or Wednesday. Would not surprise me whatsoever. If that were to happen, I personally view that as potentially a buyable dip to continue moving up even higher after that. Again, this is still on the caveat, or the premise, if you will, that CPI does not tank the market. This would be the area to buy. Or you can, if you're extra cautious, you can wait for the gap fill all the way down here, close around 165. That's a little pushing it. Again, assuming the bullish thesis stays intact, that would be pushing it a little bit. But, I would not be surprised if the 1 hour does retrace a little bit here. You can see stochastic is way overbought, right? My band's regression is near the overbought territories. You can see how, on the 1 hour, when we got to the first line of being overbought, we kind of got rejected around there. It coincided with that 173 to 175 level, and we started to, trend back down slowly. So, it's pretty important to pay attention to these levels. And, that's what I'm always updating my members on as well. But with that being said, that's kind of the main thing I'm looking at. options flow for the most part was all over the place, right? We had a bunch of repeated bullish alerts. We had some bearish alerts towards the end of the day, right? So if you go to the flow over here, you can see towards the end of the day, the last hour pretty much only puts, again, I have it specifically sorted to 100,000 or more premium, but only puts came in on Tesla, right? Most of them for this Friday, 4/12, you can see here, 170 to 172.5 puts, right? So people are clearly expecting a bit of a retrace on Tesla moving into CPI, and that wouldn't surprise me whatsoever. But as long as CPI is not some atrocious number and the market, at least Tesla, decides to rally from there and the bullish thesis does remain intact, I personally believe that Tesla is looking like it's in a pretty decent spot. My biggest concern here is the fact that the markets are a little bit shaky here, right? Again, like I said, if we zoom out over here, the markets are definitely, no longer really just trending upwards the way they've been. It's been kind of flatlining over here, right? Getting massive divergences, bearish divergences. MACD is bearish, stochastic is bearish. So it's definitely something to be a little bit cautious about, right? Especially with the, like I said, CPI. So if the markets finally do correct, I expect a zigzag down to around retesting of the previous highs. So for SPY, around 480 potentially could be could all come all the way down to that. QQQ, same idea, bearish divergences. Stochastic is bearish, RSI or MACD is bearish, same concept, right? If we lose QQQ, for instance, around 432 roughly, I would not be surprised to come down to somewhere in the low 400s next. And again, if that were to happen and if Tesla were just to simply follow the market, that would probably mean Tesla come down to about the 150s, right? At least that's what I would assume as of right now. So we'll see how all this plays out. There's a lot to pay attention to. So I'm just taking it, level by level, slowly and surely, I guess you can say. I'm not really rushing into it. But, I do like the way Tesla is overall looking. It's just my biggest concern right now is if the market will pull Tesla back down a little bit further down on a potential correction. I'm not saying it'll happen, but, it is not impossible to consider now. Now, on the daily, if we have it on the linear chart, we have arguably broken down out of this downtrend, which is a pretty nice thing to see. However, if I go here and I put on the log chart and I readjust this slightly, excuse me, you can see we have absolutely not broken down if we switch the chart over to log, which I know a lot of people, especially on slightly longer time frames, like to look at the logarithmic version of the chart. It kind of, the weight of everything is more proportionate to each other. And, here you can see that we're perfectly getting rejected today so far, and we haven't broken out just yet on the log chart. So take it as you will. There's a lot of different ways to look at it. That's why trend lines are somewhat subjective in my opinion, but again, there's still work to be done. In my opinion, the best way to look at this is simply looking at the actual horizontal level. So for instance, 173 to 175 and then 183.5, most crucial levels, those need to break. If they cannot break, Tesla is not finished in its downtrend. But with all that being said and done, ladies and gentlemen, thank you so much for watching. If you enjoyed, don't forget to hit that like button and I'll see you tomorrow. Peace.